Many people see banks as trustworthy places to store their money safely and receive financial advice, helping them manage finances, pay bills, and save for the future. But what many don't realize is that some common banking practices quietly cost customers more than expected. Banks often design their systems to make more money rather than helping customers save, and many of their financial practices remain hidden from most people. Knowing about these bank practices is the first step to managing your money better. In this video, I will share secret bank practices that can cost you money, but they won't tell you about them. It's important to know how banks work because it helps people make better money decisions and keep more of what they earn. So let's begin. Payment processing. Banks can earn extra money by rearranging transactions in the way they handle your payments. Instead of processing payments in the order you made them, they might prioritize the largest payment first. This rearrangement can quickly reduce your account balance, causing smaller payments made later to trigger overdraft fees, which may lead to multiple charges in a single day and cost people more than expected. These practices can significantly affect your finances. So to stay in control and avoid these fees, here are some simple tips to protect yourself from transaction rearrangements. Track your balance regularly. Keep an eye on your account balance to avoid surprises. Opt out of overdrafts. Disable overdraft protection to prevent fees from smaller transactions. Monitor pending transactions. Keep an eye on payments that are still being processed, as they can lower your account balance once completed. Inactive account charges. Banks often charge hidden fees on accounts that haven't been used for a long time, known as inactive account fees. If you leave your account untouched, the bank may start deducting these fees, gradually reducing your balance. Over time, if your account remains unused for too long, the bank might even close it or transfer your money elsewhere. Many people are unaware of this practice until they check their account after months or years and find their funds are missing. This can be a costly and frustrating experience for customers since the loss of funds often comes as a surprise. To help protect your account, here are some simple tips to avoid inactive account fees. Make small transactions. Deposit or withdraw small amounts regularly to keep the account active. Schedule regular transfers. Set up automatic transfers between accounts to avoid inactivity. Use online banking. Use online services to check or manage your account regularly and keep it active. Overdraft fees can add up quickly. Overdraft fees are a way for banks to quickly take money from your account. A small overdraft may not seem significant, but banks often charge high fees for each one. These fees can accumulate rapidly, turning a minor mistake into an expensive one. Even small overdrafts can result in significant charges, as banks apply high fees for every transaction that goes beyond your balance. This can cause unexpected money problems, so it's important to avoid these fees. Here are some tips to help. Opt out of overdraft protection. Decline overdraft services to prevent fees for small transactions. Use a credit card. For emergencies or small purchases, use a credit card instead of overdrafting. Avoid check payments. Write fewer checks, as they can bounce if your balance is low. Little-known bank programs. Banks have helpful programs like special loans for women, veterans, and minority-owned businesses, but they don't always share this information, so many customers remain unaware. Banks don't promote these deals widely because they focus more on their standard loan programs, which make them more money. By learning about these offers and being proactive, people can secure better loan terms, financial support, or even grants rather than just accepting common banking options. Understanding these hidden opportunities is the first step, but knowing how to uncover them is just as important. So here are some simple ways to find hidden bank programs. Ask your bank directly. Speak with a banker and ask about special loan programs. Check bank websites. Look for hidden offers under loan or grant sections. Compare banks. Some banks promote special programs more than others. Your money works for banks, not you. Banks encourage customers to save money in their accounts, but they offer very low interest rates, so customers earn little from their savings. Meanwhile, banks use that money to give loans and make investments, making much higher profits than they pay out in interest. Many banks have rules that make it harder for customers to earn higher interest, such as requiring large balances or restricting better savings options. Understanding this helps customers find better ways to grow their money instead of settling for low-interest accounts. Here are practical ways to overcome this and maximize your earnings. Look for high-yield savings accounts. Some banks and online financial institutions offer better interest rates than traditional accounts. Explore digital banks. Many digital banks offer better returns because they have lower overhead costs. Divide your money wisely. Keep your savings in different places to get better interest and benefits. Banks monitor your transactions. Banks monitor big payments to protect customers from fraud, but sometimes their tracking feels excessive. Their systems flag unusual transactions, which can lead to delays or blocked payments. Banks must also report certain financial activities, especially large transactions, to the IRS to prevent tax evasion and money laundering. While they aim to provide security, they also collect spending data for marketing and other purposes, reducing customer privacy. Understanding this helps people avoid risks and manage their money better. Here are some simple steps to reduce unnecessary monitoring. Review your bank's policies. Understand what data your bank collects and how it's used. Limit sharing personal details. Avoid giving extra information when making payments or opening accounts. Avoid unnecessary large transfers. Some transfers might trigger extra scrutiny from banks or tax authorities. Banks don't promote credit unions. Banks don't talk about credit unions because they don't want customers to leave, as credit unions offer lower fees and better interest rates that could save people money. Unlike banks, credit unions are owned by their members, so they focus on helping customers rather than making profits, which means you can get better deals on loans, higher savings rates, and fewer extra fees. If you want lower costs and better loan rates, a credit union could be a good choice, but they may have fewer locations and online features than big banks. Understanding these differences can help you decide. Since banks don't talk about credit unions, doing your own research is the best way to learn. Here are some simple ways to do that. Research credit unions online. Since banks won't advertise them, look up local credit unions and compare their benefits. Talk to current members. Learn about real experiences from people who use credit unions instead of banks. Compare customer service. Credit unions often provide more personalized service than large banks. Managing money wisely requires understanding how financial systems work. While banks help with financial security and money management, some of their rules can be costly and don't always benefit customers. Instead of distrusting banks, learning about these hidden practices can help people make smarter financial choices. Knowing this helps people keep their money safe, avoid extra fees, and choose better banking options. Thanks for watching. I hope this video helps you. Share it with anyone who might need some inspiration. See you next video.